Welcome back to my channel. I know I've been off for the meantime, but welcome back. So today's topic is how to be a trend trader in the forex market. Now, normally everybody marks does their own chart in different ways on how you can actually follow the market, but the main focus is market structure. What I teach on my channel are things I struggled with, and I know people out there might be struggling with it. But I got to realize that everybody is marking market structure differently. Some people are using three candle retracements to mark their market structure. Some people are using swing point to mark their market structure. Some people are using the line chart to mark their market structure. So it depends on how you want to mark your market structure and you're following the trend. But today's topic is how we can actually be a trend trader. So I'm going to start my analysis from the 1 month time frame. And firstly, I'm going to also shrink the chart very, very well, right? Now, what do I see here? I see a pull down here, this coming up here, and meaning towards that what this is what a bearish momentum from the 1 month chart. But if I also look inside here very, very, very well, I'll also see that what am I seeing? Price reacted here. That's what the reaction is here. We had a demand zone that is here that price reacted to. And we want to know why price is acting very funny here. We keep looking inside to see what price can act. It's not reacting at this other block either. But if you look at it inside here, there's a structure inside here. There's a structure inside here, which is showing us our sell side, our buy side liquidity, right? Fibonacci from the low to the high, right? We have what here? We have an order block here. And we have what? We have our fair value gap. Based on what I'm seeing here, if I'm using the fair value gap indicator, there's a very tiny one inside here. So we know that price came from, as a trend trader, I know in trading, many people are taught the difference between ERL and IRL. But if you want to be a trend trader, you are going to focus on what? IRL. That's what? Internal range liquidity. Internal range liquidity to external range liquidity. That is where your focus is on. So being a trend trader is internal range liquidity, external range liquidity. And we can see from this our diagram that what happened, price is on what? Price is on premium. That's why we're seeing the massive buy, the massive sell on GPUSD. Now, if I look inside here now, what do I see? If I look inside here, I have a shift of market structure here on 1 week. I have what? A buy side liquidity. And I think I can categorize this as a buy side liquidity, as a what? Buy side liquidity. And what can I see that this week has done? It has taken out what? Sell side liquidity. If market do close there, that means price has taken out sell side liquidity, and price tapped into what? A fair value gap. We know that in 1 week chart, we are only looking for expansion and what? Retracement. Expansion and retracement. That is what 1 week chart shows us. While 1 month chart is showing us permanent discount, how the body close. We also have to go and check what happened on 1 month with the body, and this close above here, which we're expecting price to go more bullish, but it did not go more bullish. And we need to know where price was settling in, which price took out what? Liquidity above here, but it's not resting on what? Let me shrink it some more. Can't really see what price is reacting to. There's a shift of market structure here. Price took out this one liquidity above here. But if I go and check it on 1 week to know why price is reacting around there. But from what I can see here on what? On 1 week, what do I see here? I see a sell side liquidity being taken out, right? Now, as a trend trader, you should know what you are doing. As a trend trader, your focus now should be more on what? Order block, and what? And fair value gap. As a trend trader, your focus should be more of order block and fair value gap, because these are what internal range liquidity, and it kind of makes it easier for you because it gives you a rest assured mind of being more worried that you're not following the trend. So what am I saying? Price taking an external range liquidity. If I come to my 1 day, I'm still following these rules here. If I come to my 1 day on what, on GBP USD chart, what am I seeing? I'm seeing what? I'm seeing a demand zone around here. I'm seeing a massive demand zone around here, right? I'm seeing a demand zone around here. And if I'm a swing trader, being a swing trader, I'll come down to what? As low as 1 hour, because I'm using that zone as my form of entry, right? And what do? I see my shift of market structure here, and price reacted at this fair value gap. Why? Because we had institutional reference point for entry. Number one, there was a mitigation block here. There was a mitigation block here. We had what? We had a shift of market structure here as a break of structure, right? If you look inside here, price came tapped on this fair value gap. So we had two fair value gap that price was tapping into, but price respected this fair value gap. Since we're following the trend of 1 day, your main focus is order block or demand zone and targeting the what? The external range liquidity. So that what makes you a trend trader. Some people might actually say you count three candle retracement for a valid structural shift, right? Three candle retracement based on ice. My coach always use three candle retracement, but for individual use, sorry, my coach uses three candle retracement, but ICT uses four candle retracement. And I have a retracement here, we many will consider as what? As a change of character, aligning with what? A fair value gap on 4 hours. And what? They are following the trend of 4 hours, aligning with 1 day, and they come to as low as 30 minutes. They come to as low as 30 minutes, like just like a top-down analysis. Price what? Price shifted structure here, price shifted structure here, and what the price do again? Price shifted structure here, and what the price do? Price came to what? Price came to the demand zone on 30 minutes, reacted there, and what? Took our external range liquidity. So being a trend trader is kind of interesting and is more relaxing for your mind. Why? Because you are following just one rule. You are only following the rule of order block and fair value gap. The next order block, as price are taking out this external range liquidity, our next supply zone is going to be this supply zone. That will be our next supply zone for GPUSD. But I can check DXY. If you look at DXY very well, price reacted here. But if you go and check it on 1 week, on why price is reacting there, if you look at it very, very well, there was a draw on liquidity here on 1 month based on DXY, right? If I go down to 1 month, I can see that price is where price is at the discount level, meaning price has to come back up to tap either this fair value gap or this fair value gap coming into the premium level. I come in here as my 1 week chart. What do I see on my 1 week chart? Prices are the order block on my 1 week chart, right? Can you see it here? Order block aligning with the fair value gap. Then what do I see? I expected price to do a change of character here. But if I had looked in at 1 day chart, that's the reason why price is buying. Price created what? A swing point here. Can you see this swing mitigation block? Price came up, created a mitigation block up here, but nothing was really created here, but there was a mitigation block around the aligning with the fair value gap. You can see it, right? Aligning with our fair value gap. So internal range liquidity, and I'm expecting price to take out what? External range liquidity. So being a trend trader is more of your focus being more on the trend of the market. You are not worried about where market is going to go to or the next trend on the market, right? Now price tapped in here. You can see that price tapped in here, right? As our fair value gap. And if you go down to 1 hour, you see a change of character that took place there. That was last week Wednesday. And if you check in our EU trade, you can see the same thing happened there, right? And that's why there's a massive sell. And you can see that price taking out this low. We have equal lows, equal lows. Price take out this low. So the sell is still coming down to this level. So it's more easier based on my research being a trend trader than being count trading the correction, because trend trading kind of help you have a relaxation of your mind. You're not really like worried about where price want to go to when you're trading the trend. So it's more easier for you if you check GJ, the same thing on DXY, JPY basket. I have our last demand zone around here. This is our demand zone. And if I come down to 1 hour, there was a shift of market structure here around this mitigation block, creating this what other block around here, our demand zone. And if you are gone as low as 15 minutes, you will wonder why this is selling. So on GPUSD, where's GPUSD? That was why I was expecting more buys. Why? Because the X JPY basket is actually selling more. But if you can see around here, it is ranging. Around here, it is ranging, right? Based on how I'm seeing the chart. So let's see how it goes. So this is how you can be a trend trader. It's something very straightforward. Being a trend trader is more of your strength is going more on other blocks and fair value gap as internal range liquidity, and your target for the external range liquidity to be either equal high slash low, or old lows and old highs. So this is the beauty of being a trend trader. So I hope this explanation was very straightforward and not so hard to understand. We're all growing and we're all learning from the market. I learned mine the hard way. And I had to come to realize that correction trading sometimes doesn't really favor me. So I started focusing more on other blocks and fair value gap. And I hope it's very impactful to you. Thank you so much. And don't forget to subscribe. Bye.